all of this stuff with AI coming out, there's just going to be more and more demands on energy. Obviously, natural gas is used to produce electricity on levels. So I think at some point, despite other obviously fundamentally, there's going to be a lot more natural gas being put out there too under this administration.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. And, well, these markets have been volatile. Watching the gold, oil trading at under $60 a barrel. Who would ever believe that could happen? And yet, here we are. And to get a better grasp of it, our good friend Michael Moor from Moor Analytics is with us today. Michael, welcome back. So, hey, interesting markets here, aren't they?
Yes, Kerry, thank you very much for having me back on your show. I appreciate it.
Always. So, where should we start? Should we start with oil? We always like oil.
Okay. Start off with the crude oil. We had been in quite a slide from late September from 65.77 a barrel down to 55.96 a barrel. But we turned bullish a couple of days ago. The trade above 57.43, I said projected this upward, and we've seen $4.44 of that so far coming into today. And then we broke back above a significant pattern at 60.09, which also warns of continued strength. We've seen about $1.78 of that so far. So I feel we're probably going to see continued strength in general from that in the days ahead. If we were to fail back down through that formation, which is going to come in at 60.08 through tomorrow, then that would likely bring back in renewed pressure. But I would also note that the RBOB, which is another word for unleaded gasoline. So when crude oil is brought in, it is put through a refinery and is broken out into two, amongst other products. The two main products that come from it are unleaded gasoline and heating oil, which are put through a process called a cracker and cracks those out of there. But those are the main drivers for the demand of the crude oil. And more recently, the demand for heating oil has really been leading the upside.
Mm-hmm. That mean we're going to have a cold winter in the Northeast?
Not necessarily. I know this may sound odd, even though I analyze these every day and make some of the larger predictions in the industry. Don't really pay attention a lot to the fundamentals because the technical analysis of price action gives you signals in the market 90% of the time earlier than the fundamentals will present themselves, even though the fundamentals are the very underpinnings of why these move.
Okay. All right. So interesting, though. What I find really interesting is that the prices went down in the first place in the face of inflation. Is this market pressures that are causing it to go down, or is it manipulation of some sort?
Well, there's a lot, obviously, with this new administration and stuff like that, opening up a lot of avenues for our energy to be put out there, especially American energy. So there's a general expectation that energy prices would go down, being that there'd be a lot more supply out there. But that's obviously, that can be interrupted at any time due to geopolitical events or...
Oh, yeah. We know about them.
What are they?
Geopolitical events. They happen, also known as black swans, right? Or gray swans, or even white swans.
Exactly. And then market structure has its own corrective tendencies. The heating oil actually was one of the main reasons why it's very important to analyze the unleaded gasoline and the heating oil when you're looking at the crude oil, is because unleaded gasoline and heating oil, their price action will lead the price action of crude oil 80 to 90% of the time.
Mm-hmm.
So, for instance, the heating oil was the first one that suggested that there was going to be a turnaround in the market because it broke back above a pattern on October 17th at around 213.55. Let me see where at 213.43. That warned of renewed strength, and that's rallied now up to 235.67. It had other multiple levels, so that's still bullish. It had also left a medium bullish reversal below yesterday that warned of higher trade for days. So this pronounced spike up here is pretty significant spike to have in just a couple of days. And the RBOB, again, which is another word for unleaded gasoline, that also left a medium bullish reversal below yesterday, which warned of higher trade for days. And that turned bullish on the break above 176.27. And now we're trading up at 188.12.
Right.
Pretty sizable move for just a couple of days.
Okay. All right. So what else you got for us today, Michael? You got it's been a while since we last spoke, and I know you've been busy. What else are we looking at?
Well, the Brent here also, just talking about the London markets, that's left a medium bullish reversal below as well, and has been bullish since the break above 61.50. So we've seen, or 61.55, we've seen $4.57 of that so far. And then it broke above another significant level at 64.29, which also warns of strength for days.
Mm-hmm.
I guess I don't really have to go over the gas oil. It's very similar to our heating oil. But if you'd like, I could...
would you... I just always had a little interest in nat gas myself. The way the market's evolved from take-or-pay contracts, from the days when nat gas was more expensive per BTU than home heating oil was, and the way that's changed. So, that market's evolved, and I'm always fascinated by it. I don't know quite why it has, but it certainly has, right?
Yeah, well, I can get into the natural gas. I'm sorry, I had said gas oil before. It sounds a little bit more like natural gas. But
gas oil. Okay.
Gas oil is basically the London equivalent of heating oil.
Sure. Yeah.
But the natural gas I can climb into with you if you like. So the natural gas, you've had me on your show a number of times these past couple of years, but we've been bearish in there from $8.20, 0.8, and we've seen $6.68 of that to the downside, which is a very significant move. And then more recently, we got bullish. We held a macro exhaustion level down below at 291.20 with a 289.30 low, and have rallied 679 ticks from there into a bullish correction. And the bullish correction, I said, was, bear with me, against the move down from 457.30 and then possibly against the move down from 539.60. So we had a minimum target to the upside of 342.30, which we took out. And our next target is 365.80. And we came shy of that by 357.20 and then roll over today. Currently, right now, it's bearish. You just broke below a formation that came in at 342.90. Which warrants a pressure likely for days. If we were to break back above where that line comes in at 342.90 minus 0.4 of a tick per hour starting at 11 o'clock p.m., that would warrant a renewed strength. I do think that this is likely going to be a pullback here within a bullish correction against one of those moves down from either 457.30 or 539.60. Because we're still pretty early into this. Also, structurally, taking out 358.50 would be key in the market because that is basically the top of this grinding basing market that we've been in since mid-August.
Mm-hmm.
So this may roll over a bit, drift sideways a bit, And then if we start heading up to take out those levels, it'll leave it an even more healthy base or symmetrical base below for this to then launch more to the upside. Also, and again, I'm not a big fundamental person, but all of this stuff with AI coming out, there's just going to be more and more demands on energy. Obviously, natural gas is used to produce electricity on levels. So I think at some point, despite other obviously fundamentally, there's going to be a lot more natural gas being put out there too under this administration or allowed. So it'll be interesting to see the dynamics between those two. But I think the demand for it could be very significant in the next couple of years, barring any other significant technological advance that produces some other type of energy.
Right. All right. So, okay. On to the next.
Okay. So then if you'd like, we could switch modes here and jump into the S&P 500 index.
Mm-hmm.
Okay. And the S&Ps, bear with me just a minute. So again, I've been on your show periodically for quite some time. So you know that in past shows, I've been bullish in the S&P 500 index since holding a macro exhaustion below at 3502. And we've rallied 3,310.25 points into this bull trend. Had a lot of other bullish calls since then. And then more recently, I just put all that bullishness on hold yesterday. The trade back below at 68.0425 has brought in 113.5 of pressure. And if we see another break below 66.7781 minus 0.59 per hour starting at 11:30, that'll warn of additional pressure. Now, one big thing I would mention in the S&P 500 index is we have a very significant formation that has been building in here. And this formation has been building since July. And so where we were set up here is if it fails down through, it's already failed back below a formation up here, which is bearish. And if it fails down below that other formation just below, which I said would also be bearish, that'll set up another level to get short below. And then a more significant level down below is going to be at 66.0145 plus 26 per hour starting at 11:30 p.m. And a decent break below there is going to project this downward 195 minimum, 275 plus maximum. And that, like I said, it's a very well-formed formation. You could see a good deal more than that. That'll also be a very pivotal area if we were to break below that formation decently and back up through it decently. That would warn of decent strength. Now, when I say decently, that is not supposed to be a vague term. It's just a term that I use. To my clients, I send out what that decent number is every day. It changes each day, but today it's 34.5 points. So in other words, if it broke below that line by 34.5 points, that would be your confirmation of being short below it. And it would have to break back above the line by 34.5 points to negate that bias on the downside and switch the bias back to long.
Mm-hmm. Gotcha. All right. So
over to the gold, if you like.
Yeah, let's go to the gold.
Okay. So the gold had a sizable correction over the past couple of days.
Certainly did that.
Yeah. And I'd said in here, so in the gold also, I've been on your show for a while. So, I've been bullish since August 16th of 2018 with the break above 1183. And we've seen 3,214 per ounce to the upside. A lot of other bull calls in here. But more recently, I just put those on hold. I warned the trade back below 43.8960 would likely bring in pressure. We've seen 368.4 per ounce from there. And then the trade below 41.96, I also said warns of pressure, possibly for 200 plus. We've only seen 174.8 of that, but still a good portion of it. And then the trade below 41.2340 also warned of pressure. We've seen 102.2 of that. but we are testing that line as we speak, which comes in at 41.3650 plus per hour starting at 11:20 p.m. That's not a line I would get long above. I would note, though, that it's 11:24 right now. Gold closes at 1:30 p.m. Eastern Standard Time. And if we leave a maintained gap higher in there on the day, which it looks like there's a good likelihood we will, that would put the bearishness on hold. What that means is today, the current official session, which would the low would be 41.1370, and yesterday's high, I don't want to use the term pit session because obviously we don't have a pit open up anymore, but the official session of when it's open, yesterday's high was 41.01.
Right.
Today's low currently is 41.1370. If that gap between price action remains, that would suggest that this is bullish short term.
Mm-hmm.
Now let me just
kind of makes sense, right?
What's that?
Kind of makes sense, doesn't it?
Yeah, exactly. And I think, so on a very macro level, let me just jump macro here. Since, September of 2022, this is basically holding the last final macro possible exhaustion that it could hold up at 43.51. Although it violated it quite a bit up to 43.98, it's generally holding it, and we smacked down a bit. If this was going to correct in a more significant nature, that would have to be over quite a period of time more than this. So we may see, if we don't take out the high, we may see some decent volatility here as or if this corrects to the downside. If it does take out that high, it just suggests that this is continuing in a more macro trend.
Mm-hmm. Gotcha. All right. What else we got? Bitcoin.
Yep. So Bitcoin, again, I've been on with you for quite a while, so I'm just going over some macro stuff here. I've been bullish in here since the break above 16,275. So we saw 110,965 per coin from there with a lot of other bullish calls along the way. Then I got bearish on the break below 124,228, and we saw 20,483 per coin below there, and a couple other bearish calls on the way down. Those are currently on hold, and we just held exhaustion on the downside at 104,203 to 103,558 with a 103,745 low, and rallied 10,635. Mm-hmm. We also left the gap higher in place on October 20th. So we do have a formation just above that comes in at 111,387 minus 54 per hour starting at 11 o'clock a.m. Eastern Standard Time. A decent break above there is going to project this upward about 6,000 minimum.
Right.
Could be more like, just give me a second. I'll take a look here. And it could be more in the tune of 12,000. We were to break above that decently and back down through it decently, that would warrant a decent pressure. And decent in there today is 1,875. Mm-hmm. And there's a minor formation below that comes in at 108 and 186. And that increases by... Actually, you know what? Scratch that formation. I don't really like the way it's drawn, but there is one below here. If we take out, if we leave a maintained gap lower intact tomorrow, that would leave a minor bearish reversal above. That would warrant renewed pressure to the downside.
All right.
The thing on a macro level in here, just give me one more second. This could possibly be in the beginnings of the bearish correction of the move up from 14,925. Mm-hmm. What does that mean? Let me just give you a little bit more teeth to that. It means that if we're gonna correct here, then it could correct right up into October 2026 with wide sideways downward movement.
October, huh? Really, for a year?
Yeah.
Really?
The run up from November of 2022 That's taken from that all the way up to October 2025.
Yeah.
About 3 years. So a correction of a year wouldn't be out of the realm of possibilities. Of course, anything can happen in here. I'm talking pretty macro out there.
Yeah. Do you think it's possible that we could see a short squeeze in Bitcoin?
If it takes out that formation above, I think you'd see a short squeeze. Again, my analysis is, for the most part, geared fairly short to medium term. So, I usually have traders in the direction of what the market's going within 2 to 3 days of a market turning point.
Mm-hmm. How will we know? So you said when it takes out a particular level, which level are we talking about that it needs to take out?
So on the upside, I'm already bullish right now, short term, as I said. And on the upside, if we take out, sorry, just give me a second, take something to calculate.
Sure. Hey, you're on a computer, you're doing this live. We appreciate the moment by moment market commentary there.
Thank you. Appreciate it. 111,387 minus 54 per hour starting at 11 o'clock a.m. Eastern Standard Time. If we break above there by 1,875, that would confirm the bullishness above it. Not that you have to buy right there. You could buy on a pullback back to the line, and your stop is going to be 1,875 back below wherever the line comes in. Keep it in, and it decreases by 54 per hour starting 11 o'clock. And so that's your that would have a minimum projection to the upside of 6,000 and a maximum of 11 to 12,000 plus. When I say a maximum of 11,000 to 12,000 plus, that means that the formation itself has its own projections. But obviously, if the market is trending in that direction, you could see far more than what the projections of the formation give you.
Right. Gotcha. Interesting.
And likewise, if we break above this line decently and back down through it decently, it would be a good short. And then you put your stop 1,875 back above the line. Now, as you get long above the line, since the line is decreasing each hour, your stop is actually going against you and widening out against you. If you break above there decently and back down through it decently and get short, then your stop is actually moving in your favor because it's moving down above the line that you were short below.
Got it. All right. So, all right. So it looks like we're kind of like in a little holding pattern here.
Yeah. But shouldn't be very long right here. Just chopping sideways for a number of days. It should be breaking out of here pretty soon.
Okay.
My feeling is I wouldn't be surprised to see it rally a bit and then roll back over, but that's just off the cuff. Get a pop up and then a roll over down.
All right. So anything else you want to cover?
Not really, unless you have any questions on that. I could get into all kinds of heavier detail on spreads and the energies and stuff, but I'm not sure if
I think we're good. I think we got we got what we came for.
I would just say this though for your audience, if you are trading crude oil as part of your portfolio, and you are not looking at the unleaded gas and the heating oil, you are putting yourself at a great disadvantage, because, for instance, my clients, I'll have them bullish the heating oil. I'll have them long the heating oil instead of the crude oil, even though the crude oil is going up. Because since the heating oil is leading the market movement, you're going to make more money in the heating oil than you would in the crude, even having your risk coming out of the gate basically the same. So how about you ever wanted to have a great leading indicator of a market? In the crude oil, your leading indicators are the unleaded gas or the heating oil, and you can determine those based off of spreads between them, which I do in a more technical level. So
how high you think home heating oil can go?
I don't really have much more of a projection for it from here. I'm just bullish right now. Actually, just give me a minute. I don't have a specific projection right here. I'm just I'm just bullish.
Gotcha.
Sometimes I do have measured amounts. I mean, so your question is valid. At this point right now, I don't have a measured move like I do in the Bitcoin.
Understood. All right. Well, hey, we always appreciate you coming on, Michael. Just tell us how we can subscribe to your work, where we find you, and all that good stuff.
Sure. I appreciate it. Yes, my website is mooranalytics.com. That's just spelled M-O-O-R with no E at the end. So it's MOORANALYTICS.com. And you can look at the different products I have on there for energy or whatnot. And by the way, Kerry, if you or your subscribers want an opinion here or there on the S&P 500 or gold or Bitcoin or energy, you're always welcome to give me a call or just pull me in real quick. And
absolutely, man.
I do analysis every morning, and I send that out to traders in the AM prior to the open of the market every day. Those are actionable trading suggestions. And then in the afternoon, I do a video podcast every day that I also send out to traders.
All right. Excellent. Appreciate you coming on. Any questions for Michael and myself, shoot me an email, kl@kerrylutz.com. And for all you interested, we're now just strictly Substack only. No more running my own website. I did that for 15 years, had enough of it. But I think the Substack gives us so many different ways to keep in touch with you, to keep you up to date on these markets, and to really let you know what's happening in the world. Michael, it's always a pleasure. Appreciate you coming on, and we will talk to you again real soon.
Thank you very much. It's an honor. I appreciate it, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.